Hey guys, FutureMeDead here with updated Elliott wave analysis of Apple, ticker AAPL. I want to show you guys two charts. We'll start with the daily time frame. These are daily candlestick charts with a range of 50 days. The picture here is very clear. Essentially, from January 6th, we are working in an impulse wave to the upside. That does not count complete. Okay, I do have reason to believe that wave 4 has put in all the final subdivisions, and we'll see that in the next chart, and we are presently moving higher in a fifth wave. Now the minimum expectation for the fifth wave is for a new high past the termination point of wave 3, which comes in at 133.60. Now walking you through this impulse wave that began on January 6th at a low of 104.63, you can see we had the first thrust higher in wave 1, followed by a deep correction in wave 2, putting in a higher low. From there, we moved higher in this extended wave, which I am labeling wave 3, which terminated on February 24. That was followed by the present weakness of the past few weeks in a wave 4. Now, very nicely, you can see wave 4 has found support at the first Fibonacci level of 38.2, which is really nice because it's shallow and it adheres to the guideline of alternation where with respect to both corrections in an impulse wave, which is wave 2 and wave 4. The guideline of alternation states if wave 2 is deep, we should expect wave 4 to be shallow relative to the previous impulse wave, and vice versa. If wave 2 were to be shallow, I would expect wave 4 to be deep. Now, so these are all clues that are adding up, leading me to believe that this is a potential buying opportunity here. Let's zoom in into the 15-minute time frame with a range of 20 days so you can see the internal substructure of wave 4. So from the high of February 24, you can see we had this 3-wave setback, followed by a sharp rally. At that point, when I saw this, because I track this stock every day, this led me to believe that the trend was going to resume immediately up, but we didn't get any follow through. What I'm looking for is an impulse wave to the upside if the larger trend is to resume, but we didn't get that. We moved sideways to lower, eventually taking out this low, invalidating my bullish count. At the time, I had this labeled as wave 1 and wave 2. So we have this 3-wave setback, which once again, once you have a 3-wave setback, the right thing to do is to turn bullish and assume the trend is going to resume. But you want to monitor the price structure of the subsequent price action. And you can see this is not a 5-wave move. This is a 3-wave move, which prompts me to label this as a wave B. So from the top, we have a 3-wave move down in A, a 3-wave move up in B, which once you have an A and a B, you expect a wave C lower to complete the correction. Wave C's are always 5 waves, as you can see here denoted wave 1, 2, 3, 4, and 5. So I have, as a whole, I have a completed A, B, C correction. Also, if you know what to look for, sometimes the market can be pretty poetic. Waves A and C are equal in length, which satisfies the guideline of equality, which states that the first leg and the third leg, in this case waves A and C, are equal in price. So I've taken my Fibonacci tool just so you can visually see it and drawn it the length of wave A, and I'm going to project this lower from the termination point of wave B, and you can see wave C is virtually equal wave A, which is a common relationship, which adds to confidence. It bolsters the idea that this is potentially an important bottom, which also leads me to label this as a potential wave 1 and wave 2. If we break down and make a new low past the low of 121.63, then simply it's not a 1-2 because we would be invalidating a rule, be breaking a cardinal rule of Elliott wave. So, but until proven otherwise, I am looking higher, working in a fifth wave. So just to summarize, the things that are leading me to turn bullish here And I've been bullish simply because I always have, perspective in multiple time frames, and the larger degree time frames simply state that Apple is in an uptrend, so we should be buying weakness. So waves A and C are adhering to the guideline of equality. In the previous chart, wave 4 and wave 2 are adhering to the guideline of alternation. The 38.2% Fibonacci level held, and the internal substructure, the internal Elliott wave count for this ABC counts as complete. So that's it for Apple. If you guys have any questions, go over to FutureMeDead.com and send me a message there under the contact tab, or reach me on Twitter at FutureMeDead. Good luck.